FirstRand is next. This one, of course, makes sense. Banks, insurance operations, investments. The big units, of course, are FNB, Westbank, and Rand Merchant Bank, so they've got a big player also in the investment banking arena. Market capitalization, the largest of the South African banks, 311.9 billion Rand. Price earnings ratio 13.08. That's not very high. Dividend yield generous at 4.26. Generally, the banks locally have drifted and not really done well. That's because of other extraneous issues to do with credit ratings and country risk and all that sort of stuff. But FirstRand has always done a good job, and I think anyway has been the market leader in terms of its tech systems. Huh?
Yeah, I mean, it's obviously a very big bank. It's across multiple countries. It can reach different customers across its subsidiaries, Westbank, FNB, RMB, like you touched on. I think what I really like about FirstRand, it's a share we hold, is that the management team was just very good. They were one of the first to recognize that the Africa story sort of been oversold, and they're the first to sort of pull back.
Yeah, they were quite restrained in that
very
way.
restrained about how they spend money going into Africa or pulling back. Even here in South Africa, they're very strict. They're very innovative. They're looking to grow organically. In fact, the only real capital investment they've done is in their London-based car finance business called Motonovo Finance. Outside of that, it's a great business. It's run very well, and they're happy to just run organically.
Keep going.
You know, keep going, do what they do.
I mean, the idea, I guess, is that if they've got good technology internally and they're getting people onto the apps and so on, then they don't need to go to the branches anymore. So the total margins will improve because clearly then their cost to a revenue ratio gets better. And the customers are happier too anyway. I mean, people love the fact that they don't have to go to the bank branch in order to buy electricity or to transfer money to friends or to do secondary top-ups on their cell phones and all that kind of stuff. It's fantastic.
I mean, some of the offering by FNB, you see it and then it just makes you ask, why is this not the standard? Why is
exactly, and eBucks is a very powerful, loyalty system that I know some people spend a lot of time gaming the system and making sure it works for them.
I mean, the other banks are capitalized well. It's not exactly as if the FNB has a monopoly on this technology. You really have to ask yourself the questions. But something you also touched on with the credit downgrade is that a lot of our banks are very fairly valued.
Yes.
Because of they took
now's the time to go hot or not. That's the dilemma, you see. You can say these guys are doing well, they're doing super, everything's looking good, but if we get a further sovereign downgrade because there's political drama and so on, then the banks are going to go suffer. So what are you going to go, hot or not?
I'm still hot because the banks are sort of, it's priced in and they're expecting a further downgrade. So they're running their business expecting their downgrade. And people forget that the top 4 banks were actually profitable during the 2008 financial crisis, and even the recession that followed.
Global standards very strong.
They still made a profit. It's world-class institutions, and they know how to run a bank in tough times.
So your sense is the time to buy them is now. Don't be chicken-hearted and say I'm going to.
Yeah, you're getting great value because they have taken a bit of a knock, and I expect them to recover. Yeah.
Okay, I think that's probably a fair argument. I'll join you on that one, although I have been blowing hot and cold on the sector, which reveals that we're a little bit ambivalent.